Thank you. Good afternoon. The Committee on Revenue and Taxation is called to order. Madam Secretary, can you call the roll, please? Oh, so since we don't have a quorum yet, we're going to start as a subcommittee. Quick announcement. Item 8, AB 1055 Baker, has been pulled by the author. And we will be going in sign-in order. Ms. Irwin, 1247.
Thank you, Mr. Chair. AB 1247 will clarify existing law that compost sold for food production is exempt from sales tax. Under current law, there's confusion as to whether sales tax should be applied to organic input material or compost when it is used for food production. The Board of Equalization regulations are also unclear, and there appears to be uneven enforcement of tax policy in this area. AB 1247 will end this confusion by stating that organic input materials are, in fact, exempt from sales tax. With me today is Justin Malone, representing the Compost Coalition, to speak in support of this bill.
Thank you.
Mr. Chair, members, Justin Malone for the California Compost Coalition. As you can imagine, our group is really interested in getting this issue clarified. We don't believe we're carving out any new exemptions for anyone. We're just clarifying that those materials that are being used by farmers to grow food, whether they are under all sorts of different terms between the BOE code and the Ag code, but those materials that are necessary to enhance the soil to grow materials should be exempt. Chemical fertilizers are, we think there should just be a level playing field and make it absolutely clear that if you have an organic input, whatever that sort of organic input is under the various terms, that is treated the same way as another fertilizer. And that's all the bill does. It makes it clear. We've had very productive meetings with both Department of Food and Ag and Board of Equalization. And if there's anything else that needs to be clarified, we're happy to do that. But we urge aye vote.
Thank you. Anyone else in support?
Good afternoon, Mr. Chair and members. Karen Lang on behalf of Mayor Edwin Lee and the City and County of San Francisco in support. Thank you.
Kim Schneider for the Community Alliance for Family Farmers and Stop Waste Alameda County in support. Thank you.
Nick Lapis with Californians Against Waste in support. Thank you.
George Runner, member of the Board of Equalization, support the bill.
Thank you. Anyone else in opposition? Anyone in opposition? Okay, going back to the committee. Any committee questions or comments? Okay, Ms. Irwin, would you like to finish?
Just hope you will view this bill favorably as it moves into suspense. Thank you.
Thank you. Then without objection, we'll be placing this on suspense. Thank you. Next item, Ms. Chang, item 5, AB 476. And as you come up, we're going to call the roll. Madam Secretary.
Chang.
Here.
Rowe.
Here.
Dababne. Gibson.
Here.
Hernandez. Mullen. Patterson. Quirk.
Here.
Wagner. We have a quorum, and then you can make a formal announcement about that bill going to suspense.
Perfect.
No, going to suspense because we did that.
That's right. So again, just to reiterate, Ms. Irwin's bill, AB 1247, file item 9, will be going on suspense. Ms. Chang.
Thank you, Mr. Chair and committee members, for the opportunity to present to you Assembly Bill 476, an important measure that will bring long overdue relief to countless Californians. I understand that this item is a candidate for suspense, so I will do my best to highlight the financial significance of this bill. As your analysis tells you, AB 476 will increase California's homeowners exemption for the first time since 1974, when the average cost of a home was $21,000. Additionally, the exemption will be adjusted annually according to the Housing Price Index in order to accommodate Californians' rising house costs, which have been rapidly growing since 1970. While some tax protections for homeowners certainly exist through Prop 13, at best, California can be called average when compared to the rest of the nation on property taxes. Where California can certainly not be called average is its cost of housing and home ownership. Second only to Hawaii, California has one of the highest costs of housing in the country. Not only is our state's average cost far above the national average, But in cities like San Francisco, LA, and even San Jose, the cost of purchasing a home is far above California's average. For those who are unable to purchase a home, they are left with the option to rent. AB 476 brings relief to this population as well by increasing the renter's tax credit. Renters in California actually comprise 54%, giving us the third lowest home ownership rate in the country, below the national average of 64%. Similar to the cost for purchasing a home in California, our state's average rent also far exceeds the national average. In fact, as of January, the average rent in California was nearly 50% higher than the national. The reality in California is that regardless of whether you own a home or rent a home, you are faced with some of the highest costs in the country. With these high and growing costs, many Californians are forced to spend anywhere from a fourth to two-thirds of their income on housing. With this significant financial burden, many individuals are forced to increase the distance they commute to work, are unable to put money away into their savings, and for the population currently renting, it may prevent them from one day owning a home themselves. So while Californians may have a lower property tax rate than the states listed in the analysis, it would seem irrelevant to compare them when our cost of housing is so much higher than the other states. AB 476 will ease a financial burden that comes with owning a home, a financial burden that does not consist solely of property taxes. And it will put more money in the pockets of California's renters to better give them the opportunity to fulfill the American dream and one day own a home themselves. With me here today in support of AB 476 is John Capal, President of the Howard Jarvis Taxpayers Association, and George Runner, Vice Chair of the Board of Equalization. And I hope that you can pass this out of committee at next week's hearing.
Thank you. Mr. Cabal?
Yes. Mr. Chairman, members of the committee, thank you very much for the opportunity. AB 476 would provide much-needed property tax relief for homeowners by increasing the homeowner's exemption from $7,000 to $25,000. This will provide all California homeowners with about $180 worth of additional tax relief. We haven't tried this in the past several years because of the budgetary constraints facing the state of California. However, we believe the time is now right to support something that benefits the greatest number of taxpayers. This is certainly true of homeowners who comprise half of California's population. And the money to support this proposal is there. The state is currently experiencing a multi-billion-dollar surplus. In April alone, personal income tax revenue exceeded projections by about $1.8 billion. We note that this bill is scored as having a general fund impact of about $1 billion. But this is not money that will be wasted, as it will go right back into the pockets of the taxpayers who earned it, helping with California's struggling economic recovery. And I echo Assemblymember Chang's comments about housing affordability, which ranks very low compared to the rest of the nation. This is especially true, of course, in Los Angeles and the Bay Area. According to the California Association of Realtors First-Time Buyer Affordability Index, only 53% of California households could now afford a single-family home. Nationally, that figure is about 76%. While this bill won't move the needle a huge distance, for homeowners, every little bit helps. And if we can get young families into homes a little bit sooner than they might otherwise be able, that's just icing on the cake. A broad-based tax reduction is a popular way to provide tax relief in a state with a heavy tax burden, and we all know the numbers. We have the highest marginal income tax rate in America. We have the highest state sales tax rate in America, second highest gas tax, and that's even before the cost of the cap and trade regulations are built into the refinery costs. We have the highest corporate tax, of course, west of the Mississippi, and the list goes on and on. Nationally, Tax Freedom Day fell this year on April 24th, but we Californians had to wait until May 3rd to fulfill our tax obligations. And while Proposition 13 has been remarkably successful in the last 37 years in preventing homeowners from being taxed out of their homes, it has not rendered California a low property tax state. In fact, even with Proposition 13, we now rank 17th out of 50 states in per capita property tax collections. It used to be higher, about 14%, but then we had the real estate crash. I think the number's probably now back up to that 14th rank. While Proposition 13 continues to provide necessary property tax relief for all homeowners, more is needed to offset all the additional government exactions that now attach to property. These take a myriad of forms, including local obligation bonds, special taxes, benefit assessments, Melrose taxes, and more recently, the explosion of so-called parcel taxes. The California Tax Foundation, in a comprehensive study of parcel taxes, concluded that property owners are now having to pay over $1.9 billion in this relatively new form of tax burden. Note that parcel taxes did not exist prior to Proposition 13. Finally, on a day when the California Compensation Commission has cited the economic recovery as the basis for its recommendation to increase both the governor's and legislative salaries, we think it appropriate that the members of this committee look favorably on this bill to give broad-based tax relief to the hardworking middle-class homeowners of the state of California. Thank you.
Thank you, Mr. Runner.
Thank you, Mr. Chairman. One thing I think we all can understand and accept is that tax policy changes behavior, it affects behavior. And so what we try to do is create and craft tax policy that then encourages behavior in ways that are positive for society. I can't think of anything that's more positive for society than people actually owning their own home, people who want to have their own home, people who control their own property. Anything that we can do to help broaden that base in order to get more people into their home just makes sense in terms of positive tax policy for the state of California. The other issue that you got here is one of just fairness. It's hard to believe that looking back that we're dealing with a tax that has not been, or with an exemption that has not been adjusted in over 40 years. Just the idea there then reeks of the fact that we have not been clearly setting a clear message as the importance of home ownership here in the state of California. This is a way for us to clearly send that message. This is a way for us to step up and make home ownership more affordable and to hold up as an ideal people owning their own homes. So I hope that the committee will look favorably and move this bill forward. Thank you.
Thank you, Mr. Runner. Anyone else in favor of the bill?
Christopher Carlisle with California Association of Realtors in support.
Thank you.
Steve Walk on behalf of Habitat for Humanity California in support.
Members of the public in opposition. Anyone in opposition? Okay, coming back to the committee. Committee questions, Mr. Breaux.
Thank you, Mr. Chairman. Ms. Chang, thank you so much for bringing this bill forward. As someone who represents a district that not only has these property taxes, we have a lot of newer communities that have Mello-Roos. So this will be much needed relief to the folks of my district, and I'm proud to be a co-author of the bill, and I'd urge its support. Thank you so much.
Thank you. Mr. Quirk.
Yes, I'd like to point out we really do not have a surplus. True, income has come at a higher level than the governor estimated. Of course, he was lowballing to begin with. But most of that money is going to go to Prop 98. We, in fact, owe quite a bit of money to the schools, which we have not paid off yet. Further, that $1 billion that we would lose, that means the schools lose money. In addition, besides the obvious debt that we have, the debt that's called debt, we also have the fact that our pensions are not properly funded at this time. So anyone who says we have a surplus, I'm sorry, I don't believe it. Thank you.
Thank you. Any other questions, comments? My question was, Ms. Chang, so this increase in the homeowners exemption is across the board. While you have a variety of homeowners who are recent homeowners or probably would be looking for some relief, you also have numerous homeowners who have very, very low property tax basis. So can you just give me the justification why you would be wanting to treat them all equally?
Yeah, I'll respond to that. One thing in the committee analysis I didn't understand, they said that the majority of the benefits would go to those who have owned their homes for a longer period of time. I think just the opposite is true. I think for new homeowners and for homes of a lesser value, a flat across-the-board exemption provides more relief to the people who own homes of a lesser value. For example, I think your typical millionaire in Bel Air is not going to give too much care about an additional $180 in the increase in the homeowner's exemption, but to a family on a fixed income, that's quite a bit of money. So it's proportionately, it's in fact, the increase in the homeowner's exemption reflects progressive tax policy, and it's hard for me to say that word, but it does.
I think, given your excellent example, Mr. Kapal, the millionaire in Bel Air who could have a 1975 basis may only be paying a few $1,000s in property taxes, so could potentially get a large tax breaks through this, while people who just recently bought homes who have very high assessments could receive a very small amount. So I think that's what the committee was trying to point out. Any other questions or comments? Okay, and with that, without objection, we'll be placing your bill on suspense, Ms. Chang. Thank you. Ms. Baker, item 3, AB 199. Oh, and as Ms. Baker's coming up, just want to announce item 2, AB 54, has been pulled by the author. Ms. Baker.
Good afternoon, Mr. Chairman, members of the committee. I'm pleased to present you today AB 1041, a bill that will help make education more affordable for low and middle income families in California. This bill increases the tax benefits for Coverdell Education Savings Accounts, or ESAs, on the state level as a meaningful complement to what already is practiced at the federal level. As you probably know, at the federal level, Coverdell ESAs are the only measure of federal tax relief that specifically helps parents with costs of a child's education from the elementary through college years. At the federal level, the Coverdell Education Savings Accounts allow individuals to deposit up to $2,000 per year in an education savings account for a child up to age 18 without being taxed on the interest, appreciation, or dividends on that account. These accounts are a community fund for a child's education, so families aren't the only ones who can contribute. You can have aunts, uncles, and others contribute to the account as long as they meet the income levels. Families are able to contribute and use these funds for educational expenses like books, supplies, special tutoring, special education needs that the school district is unable to meet, and other education supportive programs. The federal government reflected the value of these accounts in 2012 when, under the American Taxpayer Relief Act, both President Obama and the Congress came together to make the Coverdell Education Savings Account permanent. And I think this is something we should be doing at the state of California. Right now, there is no deduction for what Californians contribute to a Coverdell Education Savings Account, and that's what this bill changes. Under 1041, family can contribute up to $750,000 into the Coverdell Savings Account. And I particularly want to address a point that was made in the committee's otherwise excellent analysis, which is that it benefits high-income families. Actually, under this legislation, once you hit a certain income threshold level, you can't contribute to the Coverdell Savings Account tax with the tax deduction. So that's something that I'd be happy to provide committee members with additional information on that. It really is targeted for families that have lower and middle income economic threshold. This is something that is particularly needed now, as we know how much education expenses are not met by the state. At the college level, we're seeing increases in tuition and fees and other expenses. Plus, you're seeing the amount of debt that students are graduating with is well over $20,000 on average per student. And this is just a measure that we can take that will help families help themselves to better finance their education. So I respectfully request your aye vote, and happy to answer any questions I have with me today. A witness in support. Introduce yourself. Thank you.
Thank you. Mr. Chairman, members of the committee, my name is Ray Brunell, and I'm with the California Catholic Conference. Prior to that, I served with the United States Catholic Conference as the Assistant Secretary of Education. It was in that capacity that I worked with Senators Paul Coverdell, a Republican from Georgia, and Robert Terracelli, a Democrat from New Jersey, for the creation of the Coverdell Education Savings Accounts. The Coverdells have been historically bipartisan, and they've had specific aims in mind. One of the first aims in mind was to actually benefit young families who are starting to save for their kindergarten years, their elementary years, their secondary years, and all the way into college and secondary learning. The unique approach of the Coverdell is that it's aimed at not only encouraging saving for college and reducing long-term debt of college, but also for college preparedness. If for some reason and some chance that a child needs to pull out some dollars to take care of diagnostic evaluations or needs at the K-12 level, they can do so. If not, then these funds are rolled over and held over for their college opportunities as time goes on. This is an expense that's experienced both in our public and our private schools. There are some expenses, some supplemental expenses that aren't met by particular schools. I mentioned diagnostic testing. A lot of diagnostic testing only takes you to a certain point, and remedial services sometimes need to be complemented and augmented, regardless of where your child goes to school. School transportation costs are not covered throughout the state of California, and they have to be borne by certain families. The same is true if you take a look at home educational technology and the like. What the Coverdell does with its income tiered levels is that it does focus in on low, working, and middle class families, those who are the least likely to qualify for special assistance. The very poor, they're able to get special assistance and special breaks. The very rich or the wealthy, they don't need the same break. But those who will need to save for college and to be fully prepared to succeed once they get to college need some support. Now, Coverdells are great. They have a beautiful purpose in mind, but their benefits are very limited. The only benefits that come from this is by paying a little bit, all the interest that is earned comes out and you can take it out tax-free. What we're looking to do through this measure, what we're looking through 1041, is to actually give an added incentive to save their own money through their hard-earned dollars, put it away for their child, to start while the families are young, to let it build up towards college, and if necessary, able to pull it out and use it for the most essential needs. So we ask for your support on this bill and stand ready to answer any questions.
Thank you. Anyone else in support?
Mr. Chair and committee members, Ron Reynolds, California Association of Private School Organizations, in support.
Thank you. Anyone in opposition?
Samantha Corbin with the California Tax Reform Association, unfortunately in opposition to this bill. Much like other bills of this type, we just feel that the cost of education can be lowered for all students more efficiently through a direct appropriation rather than a tax credit. Thank you.
Thank you. Anyone else in opposition? Okay, coming back to the committee. Any committee comments or questions? Mr. Quirk.
Yeah, my general concern with anything that's a credit or a deduction for taxes is that low-income people in general don't pay the California income tax. And that's why I think it is proper to say that it is higher-income people who can benefit from this.
Happy to answer.
Please,
thank you for the thoughtful question, Mr. Quirk. One thing to keep in mind, because Coverdells are a community fund as opposed to other accounts and savings accounts that people can set up, other members of a family, as long as they meet the income caps, can contribute to it and still have the incentive and the benefit of being able to do that. If you are a couple that's making $220,000, you don't benefit from this. But if you're someone who is making $190,000, you can benefit from this by contributing for your family. And that covers many of the people in the Bay Area who already have a very high cost of living for just being in the Bay Area itself to be able to supplement their programs. I'm thinking of families that have kids that may want to take AP exams, and these are just an example of an expense that happens as well. So appreciate the thoughtful question and offer that other perspective.
It's just I don't think $190,000 is low income.
I certainly think that it is a better income than elsewhere in the state, but given the Bay Area and my district and throughout the broader 9 Bay Area county, which we both represent, it's a very high cost of living, and anything we can do to help families to contribute to their savings for college is something we should be doing.
Any other questions, comments? I guess my question and comment was, as is outlined by the opposition, there were concerns that the money that would normally be tax dollars that would go into Prop 98 be paying for public schools. You're now taking that money and they can go to K-12 private schools. So would we be better off making sure that money stays around with public education and continue to fund that system?
Well, the benefit of this program is it does allow families to have an extra savings for some of their public school expenses, some of which I outlined. If you have a special tutoring that you need to provide for your child who may be in public school, if you have special education needs that you want to be able to provide, I just provided the example of AP as well. And so I think it's more of an approach of having as many ways of supporting families to do savings that may otherwise not be able to happen, particularly because of the community aspect of the fund. I'm not sure if you wanted to add as well, Ray.
The only other thing I would add, Mr. Chairman, is the extremely low fiscal note on this bill. This bill is $450,000. I think the impact that would have on the education budget and the state budget would be minimal. It is open to participation of all public and private parties from participating in it. Most of the families who do participate in it will be going to the public schools. So I think it's very difficult to assess how much is one population and how much is another. And it wouldn't necessarily just be for tuition. The special needs, the school transportation, the summer after-school extension programs that are all very supported by this bill would still be a positive impact for the common good.
Absolutely understood that. And while we don't know the percent of the impact, we do know that the money currently would be siphoned from the general fund into these Coverdales, and that basically there would be a certain amount of money that would go toward private education. So while we can debate the amount of it, that's, again, taking public dollars and moving them to private education. So without objection, we'll be placing file item 7, AB 1040. Oh, sorry. Ms. Baker, did you want to close? I apologize.
Thank you. I appreciate the thoughtful questions. I just add the point of how much we can do to help families, again, help themselves as much as possible with expenses that the state is not able to make, including in our public education system. And respectfully ask your aye vote. Thank you.
Thank you. And without objection, we'll be placing AB 1041 on suspense. Ms. Eggman, file item 3, AB 199.
Thank you, Mr. Chair and members. I'm very pleased today to present AB 199, the kind of bill I think that we all like, where we talk about taking what has been discarded and turning that into jobs. I'd like to first off thank the consultants in the committee for their work on this bill, and we are certainly committed to continue to work on it as it moves forward. AB 199 would incentivize recycling projects to expand in California under an already existing program called the California Alternative Energy and Advanced Transportation Financing Authority, also called CATFA. CATFA is an existing program that has never been fully utilized since its existence in 2010. Specifically, under the CATFA legislation, there are tax credits for jobs or for renewable energy and nanotechnology. This would serve to also include recycling projects in that, or equipment that people use to be able to create jobs, again, out of trash. We currently ship billions overseas to other countries where they are creating new products with our recycled trash that we throw away, which has now become a commodity. We know that there are jobs moving to other states who offer sales tax for people to purchase the equipment to do this kind of manufacturing. We know that California has been a leader in recycling, and we have quite a few recycling centers around the state, but we have fewer manufacturing ones. And as we have seen the manufacturing leaving California, I think we need to look for every opportunity we can to keep it here, and especially if we can also lower our greenhouse gas emissions in that process. It's a win-win situation. And so, again, we're excited to present this bill. It's meaningful in my district, and I think around the state, and especially areas that have been harder hit by the economy and may be left behind in the tech world. But certainly we can create these manufacturing jobs out of what is now a commodity, and I have people here speaking in support.
Thank you. First witness.
Good afternoon. Nick Lapis with Californians Against Waste. As a state, we've done a pretty good job recycling over the last 25 years. We've cut the amount of garbage that we send to landfills in half. What we haven't done as well is find ways to reintroduce those materials into California's manufacturing economy. California exports 18.6 million tons of material per year, valued at $7.5 billion. If processed in California, we would need to expand our recycled content manufacturing capacity by 300%, which would create 58,000 new jobs. It would also reduce freight emissions alone by 2.3 million tons per year. And that is just for the material we recycle now. If we need to recycle an additional 22 million tons to reach our state's 75% goal, if we keep that material here, we'll have similar benefits. Supporting in-state recycling gets us to keep both the environmental and economic benefits within the state as opposed to exporting those overseas. Also, our current recycling system is at the mercy of Pacific Rim countries, port bottlenecks, other volatilities, and none of that would be a factor if we could keep more recyclables here. This bill is obviously not a panacea that will solve all of our recycling market development problems, but it will help incentivize higher levels of recycling and composting as well as in-state manufacturing. While this might not always be enough, we have explicitly heard from several recyclers that incentives like these have led them to open up recycled material processing facilities in other states, and we hope to replicate that success in California. Finally, the beauty of this program is that it's not a blank check. It is only open to projects that demonstrate an overall environmental and economic benefit to the state. And in the projects that have been done so far under this existing program, they've generated $79 million of environmental benefit and $185 million in fiscal benefit to the state above the cost of the sales tax exemption. Thank you.
Great, thank you. Second witness.
Chairman and members, Kelly Jensen representing Recology, and as the chairman knows, because of his leadership on waste and recycling issues in San Francisco, Recology and the City of San Francisco are committed to a zero waste goal. We very much appreciate the author's multi-year effort to this bill. Every day, Californians do their part by recycling. It has become second nature for us, and everyday waste companies like Recology spend significant resources to keep our commitment to our customers and the state's goals by trying to pull every valuable piece of material out of the waste stream before it reaches a landfill. But we need this bill to help. This is an expensive process, and we need to encourage and incentivize new technologies. This bill is good for ratepayers, beverage manufacturers, recyclers, composters, and waste companies. We ask for your ayes.
Thank you. With two witnesses, if you could just state name and affiliation.
Michael Shaw, California Manufacturers and Technology Association, in support.
Thank you.
Paula Treat on behalf of CPRC, which is the California Coalition of Plastic Recyclers. And just real quick, I actually have the people who will use this, and I will tell you the big decision they're making right now is, do we stay here? Do we go to Indiana? Do we go to Texas? I think this helps them stay there, anywhere from $5 million and upgrading to $160 million.
Great. Thank you, Ms. Strait. Anyone else in support?
Yeah, Kim Steiner on behalf of Stop Waste Alameda County, the Community Alliance of Family Farmers, and the California Composting Coalition in strong support. Thank you.
Thank you, Mr. Chair and members. Jason Schmelzer on behalf of the California chapters of SWANA in support.
Mr. Chair and committee members, Terry Lavelle representing CRM Company of Compton, largest crumb rubber processor in the state, and we strongly support this bill. Thank you.
Chuck Helgett representing Republic Services in strong support of the bill.
Tiffany Whiten on behalf of Replanet in support. Thank you.
Adriana Zario on behalf of Treasurer John Chung in support.
Mike Robeson here on behalf of the Glass Packaging Institutes, the Association of Glass Container Manufacturers in California, and I think this bill would go a long way to help encourage more manufacturing investment in the state. Thanks.
Thank you. Anyone else in support? Anyone in opposition? Okay, coming back to the committee. Mr. Patterson.
Thank you. Appreciate the opportunity to, exhibit the fact I'm new. Mr. Chairman, I was prepared to be here today and vote in favor of this and was a little surprised about it going to suspense. Could you explain how what we're doing here out of an existing fund turns into a suspense file? My understanding was it's got to have some kind of new large amount of increased tax or a big cost or something like that. And I'd like a little bit of a better understanding. I thought we had a fund that was prepared to be able to take care of this.
Thank you for the, question. Anything with an unknown cost automatically goes on suspense per the committee rules. So that's why we're putting it on suspense.
And these costs are essentially unknown.
Well, because right now we have over $283 million that was approved over a 5-year period. Only $75 million of it was utilized, so there's a gap there. So we're not, again, certain what the fiscal impact could be, but that was sort of going to be my question to the author. But it could be in the hundreds of millions, so that's why it is on suspense. Sure. Anything over $150,000 is on suspense.
Appreciate that. Thank you. I was ready to vote.
Thank you.
We'll be ready to vote when it comes off suspense.
Other questions? So I guess just going back to Ms. Eggman, I guess my question was, given the underutilization, how did you see the bill impacting that, or why do you see the need to for the bill based on the underutilization?
Well, the program for other types of technologies. So this is just adding a new category into an underused fund. So we're hoping. I mean, there's money in the fund. It's not all been used, and it's been targeted towards other technologies. And we just think this is a good way to reintroduce manufacturing back in the state of California. And there seems to be an adequate amount of money in the fund to pay for it, and it's got to be a net benefit.
Great, thank you. Seeing no other questions, do you want to close?
I would just respectfully ask for this to come off suspense when the time is right.
Thank you. So without objection, we're placing AB 199 on suspense. Thank you.